So let's talk about the shocking surge in silver. It's a metal that is suddenly white hot. And, the big question on everyone's mind is pretty simple. Why is this happening now? And what in the world does it mean for the price in 2026? We're going to follow the clues together and find out. All right, let's just get right to it. 144%. Get this. That's the staggering return for silver so far this year. I mean, that's not just good. That's the kind of explosive growth that leaves pretty much every other investment in the dust. And that right there is exactly why we need to figure out what's going on. So, this sets up the central mystery for us. What is fueling this price explosion? You gotta wonder, are we in some kind of temporary bubble, or is this the new reality for silver? And of course, the million-dollar question, where does this all leave the price come 2026? To get the answers, we have to look at the two forces that control everything in a market, supply and demand. Okay, let's dive in, starting with our very first clue, the supply side. Because, when a price shoots up this fast, the first place you've got to look is for a shortage. Is there simply not enough silver to go around? Let's see. First up, let's meet the key players in the production game. Mexico, as you can see, leads the pack by a pretty huge margin. Then you've got China and Peru. But here's something interesting. China's output actually dipped. Now, in a market this tight, believe me, even a small drop from a major player can send massive ripples through the entire system. And this number? Well, this basically confirms our suspicions. According to the World Silver Survey, the market was facing a supply deficit of 117.6 million ounces in 2025. This isn't just some small gap, folks. It's a crystal clear signal that the amount of silver being mined is just not keeping up with what the world wants to buy. Now, here's where it gets really interesting. Why can't we just, mine more silver? Well, the core problem is that a whopping 72% of all silver is a byproduct. It gets pulled out of the ground when miners are actually looking for other stuff like copper, lead, and zinc. This means silver's fate is completely tied to the demand for these less glamorous metals. You can't just decide to get more silver without totally messing up those other markets. It's a real bottleneck. So, we've established a serious supply constraint. That's one half of the equation, right? But a tight supply only really matters if people are lining up to buy. So now, let's follow the demand trail and see exactly who is snapping up all this silver. And this, right here, is the biggest thing that separates silver from gold. See, unlike gold, which is mostly for jewelry and investment, silver's story is overwhelmingly industrial. Almost 60% of all demand comes from building the stuff that runs our modern world. And where exactly is it all going? Well, just look at this list. It's in every single technology that is defining our future. We're talking solar panels for the green revolution, data centers for the huge AI boom, 5G infrastructure, medical tech, and, of course, the massive shift to electric vehicles. In short, the future is literally being built with silver. And if you want to understand the insane impact of just one of these trends, just look at this comparison. A normal gas-powered car uses about 15 to 28 grams of silver. A battery electric vehicle? It needs nearly double that amount. So just think, as the whole world goes electric, the baseline demand for silver is set for a massive long-term surge. But hold on, it's not just industry. We're also seeing a whole new class of buyers jumping into the market. You've got central banks in countries like Russia and Saudi Arabia increasing their silver holdings. And then there's us, retail investors, piling into silver-backed funds on top of the consistent, strong cultural demand you always see from festive and wedding season. And this retail investor boom is, well, it's staggering. This chart shows the assets under management, basically the amount of money in silver funds. In just 1 year, it doubled. The demand was so intense, it got to a point where some fund houses actually had to temporarily stop taking new money because they just couldn't source enough physical silver to back it up. Wow. Okay, so the evidence seems pretty clear, right? Supply is squeezed tight while demand is absolutely booming from pretty much every direction. So this brings us to the final piece of our investigation. What does all this mean for the price in 2026? Let's see what the experts are predicting. First up, we've got the forecast from the big financial institutions, places like Motilal Oswal and Axis Securities. Their analysis, which is based on all these fundamentals we've been talking about, points to a price of 240,000 rupees per kilogram. From today's levels, that would be a pretty solid return of about 12%. But that's just one way of looking at it. There's another method called technical analysis. And what these folks do is they kind of set aside all the fundamentals of supply and demand, and instead they forecast future prices just by looking for patterns in the historical charts. And for the people who live and breathe these charts, the target looks a little different. Based on a classic rounding bottom pattern, which, by the way, has been forming over many, many years, these technical analysts are eyeing a target of $85 per ounce. And that $85 target? Well, from today's price, that translates to a potential upside of roughly 20%. So there you have it. You've got the fundamental forecast pointing to about 12% growth, while the chart watchers are seeing a potential 20% jump. Now, before we wrap this all up, it is absolutely essential that we add a final word of caution. Because while the future for silver looks incredibly bright, its past tells a story of extreme volatility that every single investor needs to be aware of. Just take a look at this timeline. Silver hit a major peak way back in April 2011. But anyone who bought at that high point, they then had to watch in agony as the price crashed by a massive 70 to 75%. It took until December of 2025, that's over a decade, just to get back to that 2011 price. It's a really crucial reminder of just how wild this market can be. So, given this crazy history, what's a strategic way to even approach it? Well, step one is simple. Just acknowledge the high volatility. Because of this, trying to time the market with a single big lump sum investment is incredibly risky. Instead, what many experts suggest is considering a systematic investment plan, or an SIP. That lets you invest smaller amounts regularly, which helps average out your purchase price over time. Which leaves us with this final question to ponder. On one hand, you have an undeniable industrial future, one that's being driven by an electric revolution. But on the other hand, you have this really volatile investment past, filled with dramatic peaks and valleys. The key for any investor, really, is figuring out how you balance those two powerful competing narratives.